Hello, my name is Navdeep Patwal. I'm a senior program funding analyst in the Program Funding Administration team. And in this video, we will walk you through how to complete the 2025 FAIR, CWELCC, and OTEF Reconciliation template for single site operators and for multi site operators. The example we are going through is a single site template. Differences in the templates will be highlighted as we go through the video. Multi-site differences are highlighted at the end of each tab description.
Now I'll speak to the deadline compliance section. We want to highlight the importance of meeting the deadline. Peel Region is required to submit our data to the ministry by June 1st. To meet the provincial timeline, all FAIR submissions must be fully completed and signed off and submitted to Peel by April 30th. It is essential that all submissions are completed accurately and on time. Incomplete or late FAIR submissions may result in corrective actions, as outlined in the compliance policy within Peel's Service Provider Handbook. These actions can include funding impacts, such as funds being withheld, and may also affect your 2026 funding allocation. Please ensure timely and complete submission. Meeting the April 30th deadline helps ensure continued funding and accurate reporting. This year, we have streamlined the process by combining the FAIR and the CWELC and OTEF reconciliations and the ministry's standardized reporting template. By completing this template, you'll meet all three requirements. In addition, this template provides support for other requirements. Below is a summary of the outputs of this template. This template allows you to complete your 2025 FAIR, complete your 2025 CWELC funding reconciliation, complete your 2025 one-time emergency funding reconciliation for major capital or operating funding, supports the standardized financial report issued by the province, provides GovGrant inputs for CWELC and OTIF reconciliation, generates the note disclosure for funds received, spent, deferred, or recovered, a new requirement from Peel. Please refer to Peel's accounting and note disclosure guideline for more information. This template contains 12 tabs. Please enter the information only in green highlighted cells. Tabs A1 to A6 require data entry. Tabs A7 to A12 are review only and do not require manual input. The FAIR guideline and Peel's accounting and note disclosure guideline should be referenced alongside this video when completing the template. It is strongly recommended that you consult your accountants, auditors, and bookkeepers to ensure accuracy and compliance throughout the process. Also, if you have additional questions, please contact your EYS specialist or email our centralized inbox at earlyyearssystemdivision@peelregion.ca. Now we'll move on to tab 1.
In tab A1, enter the provider's information starting on row 6 all the way to row 17. Once the provider information is complete, review the annual attestation beginning on row 21. Important note, you will complete this step after filling out the entire template. Once you have completed the entire template, come back to this tab and on row 26, enter the signing officer's signature and the sign off date. Below is the purpose of each tab. Please read all instructions and information throughout the template. For multi-site templates, the license number is entered in tab A2, Allocations and Operating Plan tab, in row 10, and enter the license name on row 11. The license number and name entered here are carried to the operating plan KPI tab and through tab A6 operations for the different sites. It is essential for each site you input information in the corresponding license number throughout the template to ensure accurate reporting. We'll move on to tab 2 now. Tab A2, Allocations and Operating Plan. We'll speak to the allocation section first. In tab A2, enter the funding allocations calculated by the regional PEAL into green cells only. These amounts can be found in GovGrants under your 2025 CWELCC cost-based funding announcement and your 2025 CWELCC allocation in lieu of profit or surplus announcement. Enter in amounts for program staffing, supervisor, accommodations, operating, fixed, and variable. The total of these components is referred to as your benchmark allocation. To arrive at your total program cost allocation, we add in your legacy top up and growth top up if applicable. Next, we enter in expected base fee revenue offset, which in this example is $400,000, and this must be entered as a negative as it is deducted from your total program cost allocation. Then we enter in the amount in lieu of profit and surplus, which can be found in GovGrants in your in lieu of profit or surplus announcement. Please note the in lieu of profit or surplus amount is not treated as an expense within the template and is managed separately in the reconciliation process. The total of these allocations entered in this section represent your total CWELCC allocation. In the example you see on the screen, the total CWELCC allocation is $1,541,640. As mentioned earlier, for multi-site templates, the license number is entered in tab A2 Allocation and Operating tab on row 10. Also enter in the license name on row 11. The license number and name entered here are carried to the operating plan, KPIs, and tab A6, the different operations for each site. Providers must pay attention to the pre-populated license number when entering data. For each site's data should correspond to the license number that is pre-populated. Single sites enter the license number on tab A6 on row 7. Now we'll review the operating plan. All providers are required to complete the operating plan, which establishes the proration methodology used to allocate costs between 0 and 6 and 6 and 12. This is also a reporting requirement from the ministry, and Peel is using the ministry proration calculator provided. The region recommends using May 30th operating data as it aligns with the benchmark calculations. If an alternative date is used, providers must clearly identify the date here and the rationale for not using May 30th data here. On row 33, enter in the site's name and the number of months the site participated in CWELCC in 2025. The number of months entered helps calculate the lieu of profit surplus related to the $6,000 fixed portion. If the site operated less than 12 months, the $6,000 is prorated. Enter in all applicable data divided by the different age categories of infant, toddler, preschool, kindergarten, family, primary and junior. On row 35, enter in operating spaces for eligible CWELCC children 0 to 6, and row 36, enter in operating spaces for ineligible children 6 to 12 years old. For mixed age groups, providers can use both rows to enter in information. The example on the screen shows in kindergarten there are 24 eligible CWELCC children and 2 ineligible CWELCC children. Then enter in the service days, the typical hours of service per day, and the total license spaces by the different age categories for applicable age groups. Once all the information is entered, scroll down and you'll see the percentages allocation split by 0 and 6 and 6 and 12, split by programming staffing, supervisor, accommodations, and operations. For multi-site templates, you must complete a separate operating plan for each individual site. The license number for each site is automatically pre-populated based on the allocation. Before you begin, make sure you're entering the operating plan under the correct license number. This ensures that each site's operating plan accurately matches its corresponding allocation. Next, we'll move on to tab 3. Tab A3 supports accurate reporting of regional funding received. Providers should complete only the sections that apply to the grants they receive. Information entered here flows automatically through the template to support reconciliation, reporting, and note disclosure. Please review all grant specific instructions carefully before entering data. We'll begin with Lifelong Learning Day. This section only needs to be completed if you received Lifelong Learning Day in 2025. To begin, click the plus sign to expand the section. In this section, you'll enter the awarded budget and the amount spent, exactly as reported in GovGrants. Please ensure your GovGrants reconciliation has been approved by the regional appeal before entering this information here. Once the total spending has been entered, you are required to allocate the expenses between children age 0 to 6 in column G and 6 to 12 will be calculated. If your center only serves children age 0 to 6, the full amount spent is allocated to the 0 to 6 column. If you serve both age groups, the allocation must be split. Parent fees should be allocated using actual enrollment data to determine the 0 to 6 portion. In the example you see on the screen, the provider was awarded $1,000 and reported 975 spent in GovGrants. The provider calculated $800 was for the 0 to 6 split. For lunch and refreshments and wages and mandatory benefits, providers can use actual cost or the proration calculation from the operating plan. The proration calculation is displayed in the instructions here. In the example you see, nutrition awarded budget was $200 and the provider spent $200, so there is no recovery. The provider chose to use the proration allocation of 93.9% and reported $187.80 for the 0 to 6 column. The information entered in this section is automatically connected to the other tabs in the template. No additional entry is required in tabs A6, A7, or A9 for lifelong learning, as these mounts are auto-populated based on what you enter in this section. For multi-site, lifelong learning day is the same as single sites. Now we'll move on to the next section. One-time emergency funding, major capital, or short form OTEF major capital is the next section. This section should be completed only if you receive funding under the 2025 CWELCC OTEF Major Capital Program. To begin, click the plus sign here. On row 58, respond to the question: has the project been completed as of December 31st, 2025? Please enter yes or no. If the project has not been completed, any unspent revenue will be recorded as deferred revenue. In rows 58 to 68 in the approval section, enter the approved amounts from your OTEF memo. I'll bring up the OTEF memo now to show you. As you can see, total project cost is $50,000 and covered by insurance is 5,000 and covered by landlord is 5,000, giving us a net project cost of $40,000. Then the providers are required to enter in the 6 to 12 portion. In this example is $6,000, and then your cost sharing contribution is $8,000, giving us a total OTIF capital major funding received of $26,000. In the reconciliation section, enter the total cost of the project and the actual amount of insurance and landlord coverage. The rest of the calculation is completed, and you see that after entering everything, there's a $13,000 recovery. If the project is not completed yet, enter the cost incurred up to December 31st, 2025. For example, if I change the question to no, the project has not been completed, and assume we have incurred $30,000 worth of costs as of December 31st, 2025, you'll see the deferral amount populated in cell D74 of $13,000, and the recovery changed to $0 because the project is not complete. Please complete the reconciliation when the project is complete. I will change this back to yes. And you see the $13,000 recovery of OTIF. Unspent funds for incomplete projects are recorded as deferred revenue in A5 and A9 in accordance with accounting guidelines. If project is completed, you'll see in A8's GovGrants input tab the amount to be entered in GovGrants, and A9 will show any recovery if applicable. If you are a multi-site provider and more than one site was granted OTIF major capital, enter the information separately for each site in the fields above. Ensure the amounts are being entered in the corresponding pre-populated license number. Next, we'll review the 2025 CWELCC One-Time Emergency Funding or OTIF operating section in tab A3. This section only applies if your organization is receiving OTIF funding in 2025. To begin, click on the plus sign to expand the section. Using your OTIF operating memo, enter the approved amounts in rows 98 to 107. I'll bring up the operating memo to show you how it looks. When entering in total project costs, ensure it's net of any insurance or landlord coverage. You see the $25,000 here, you should enter it right here, $25,000. Then enter in the 6 to 12 portion, which is $5,000, and your cost sharing contribution, which is $4,000, giving us a total OTIF operating funding received of $16,000. Beginning on row 114, you enter in the actual amount spent. Please note this amount should be net of insurance and landlord, and the rest of the calculation is done for you. Please note an important reconciliation rule. If there is underspending in CWEL cost based funding, eligible OTIF operating expenditures may be applied towards cost based funding in order to maximize cost based funding. This template will calculate this for you to ensure you maximize your cost based funding. To ensure accurate treatment, to confirm whether any OTEF operating expenditures were applied to cost based funding, refer to tab A7, CWELCC Reconciliation, specifically row 122. You may expand this section in tab A7 to view the detailed calculation. No additional manual adjustments are required. Also, the information flows to tabs A6, A7, A8, and A9. If you're a multi site provider, enter in the above information per site. If more than one site was granted OTEF operating, ensure when entering amounts, they are entered under the correct populated license number. Next, we'll review the 2025 Program Staff Top-Up Funding section in tab A3. This section only needs to be completed if you have received program staff top-up funding in 2025. To complete this section, refer to your 2025 Program Staff Top-Up Reconciliation Excel sheet, Part 4, and enter in the information. I'll bring up the reconciliation now to show you. In tab 2 of the reconciliation, you'll see Part 4. Part 4 gives you the information to input here. So you put input awarded budget of $40,000, and this provider spent their entire budget. So you enter in $40,000 here, and the 0 to 6 split is provided for you. In this example, the 0 to 6 split is $30,000. Please note that the program staff top up funding is automatically added to revenue in tab A6 operations, and please ensure to add the expense in A6 operations expense section. Also, it automatically is added to A7 and deducted from CWELC eligible program costs. Also updates tab A9. For multi-site providers, there's no difference from the single site template for program staff top up. Once the section is complete, you may proceed to the next applicable grant. Next, we'll review 2025 expansion funding in tab A3. This section only needs to be completed if you received expansion or startup funding in 2024 or 2025. In this section, first indicate whether the project was completed as of December 31st. In the example on the screen, the project has not been completed, so the provider has selected no. Then enter in the total funds received up to date. You can refer to GovGrants payments to see the amount of payments you have received so far. Then enter in the amounts of funding used using your own records. If the project has not completed by year end, any unspent funding is automatically treated as deferred revenue and carried forward. In this example, $10,000 will show up as deferred revenue. Information entered here flows directly to tab A5 for deferred contributions and tab A9 summary of reconciliation. Please note that expansion funding does not support CWELC cost-based funding and does not appear in CWELC eligibility or reconciliation calculations. You're required to complete the expansion funding reconciliation when requested or required. For multi-site template, there is no difference from the single site template for expansion funding. The last section in tab A3 is 2025 school age or 6 to 12 funding. This section only needs to be completed if you received funding for children aged 6 to 12 in 2025. To complete this section, refer to your 2025 school age funding reconciliation template, tab 9, and you'll see a summary of what amounts to enter, similar to this. As you can see, the total awarded budget is $25,000. So the provider entered $25,000. They reported $24,000 spent. So they entered $24,000 here, showing a $1,000 recovery. School age funding supports services for children aged 6 to 12 and is not part of the Seawell cost based funding. Once entered, this information is automatically populates school age revenue in tab A6 operations and updates tab A9. School age funding does not impact CWELC eligible costs or reconciliation. However, if you did not receive school age funding, this section can be left blank. For multi site template, there is no difference from the single site template for school age funding. Now, moving on to the next section. In tab A4, key performance indicators, also referred to as KPIs, this tab collects mandatory information required by both the Regional Peel and the Ministry of Education for CWELC monitoring, accountability, and provincial reporting. All KPIs must relate only to CWELC eligible children aged 0 to 6. Please ensure all green highlighted cells are completed. If a KPI does not apply, enter 0. KPIs are grouped by category. Please note that Tab A4 is strictly used for monitoring and reporting purposes and does not affect CWELC reconciliations or recoveries. For multi-site templates, some of the KPIs we're asking are at head office level and some at site level. When entering KPIs, ensure the KPIs for each site are corresponding to the pre-populated license numbers to ensure accurate data collection. Next, we'll review tab A5 Financial Position. Tab A5 Financial Position. This tab reports your year end statement of financial position based on your audited financial statements. It is important to have the FAIR guidelines and Peel's accounting and note disclosure guidelines open while filling out this section, as greater detail is provided in those documents. This tab is similar to the 2024 FAIR template. We have only made a couple of changes to this tab. Please complete only the green highlighted cells. Enter balances exactly as shown in your audited financial statements. If a value does not apply, enter 0. This is the assets section. We have made no changes to this section. Moving on to the liability section, we will highlight the changes that we have made to this section. Due to the region of Peel, row 26 is automatically populated, which flows from tab A9. To receive the final amount due to the regional appeal, please complete tab 6. Once you have completed tab 6, revisit this amount to ensure it's accurate. We have also made changes to row 28 and 29, deferred contribution from Peel, OTEF major capital, and for expansion funding. These amounts flow directly from tab A3 Peel Region Grants. If you selected No to the following question, has the project been completed as of December 31st, 2025, and have unspent funding amounts, the amounts will be populated here and here. We have also made changes to the mortgage line. Mortgage should be related to childcare facilities. If there If there was a mortgage related to childcare facilities, please ensure to enter the principal amount paid in column G. In this example, $2,000 of principal payments toward the mortgage was paid in 2025 for childcare facilities in Peel. This amount is added to tab A7 as an eligible CWELC expense. If a provider serves 0 to 12, this amount is prorated We use the proration from tab A2 operating plan, and we use the accommodation category. For the equity and net assets section, we have made no changes to this section from the 2024 FAIR. Returned earnings are automatically calculated based on the amounts entered starting on row 54. Row 55 is your current income or loss or surplus deficit. This line captures the net operating result for the current fiscal year. A surplus increases retained earnings, deficit decreases them. It reflects CWELCC and non-CWELCC results combined. This amount is connected to tab A6 and it captures the total income or loss. In this example, we have a current income of $69,616 being added to retained earnings. Right now, the statement of financial position is balanced. We have total assets of $260,000, which matches total liabilities and equities of $260,000. If the financial statement tab is not balanced, you will receive an error message on row 51. For example, if I enter in $10 under other reserves, you'll see a message pop up on row 51 stating not balanced and a difference of $10. I will remove the $10. Important accounting reminders. Before moving on, there are a few important accounting reminders. Please ensure that all amounts reported in tab A5 match your audited financial statements. Unspent capital funding at year end is recorded as deferred contributions, and any amounts recoverable to Peel are reflected as a liability where applicable. These treatments align with Peel's accounting and note disclosure guideline and help ensure consistency between your fair submission and audited financial statements. Once tab A5 is complete, you can proceed to tab A6 operations. If you if you are uncertain about any balances or accounting treatment reflected in the financial statements, we recommend confirming details with your auditor or accountant before submitting the fair. For multi-site template, there are no differences from the single site template for the financial position. Providers are only required to report information at a head office level and not site level for the statement of financial position. Next, we'll move on to tab A6 Operations. Tab A6 Operations. Tab A6 is the most critical tab in this template. It drives the CWELCC reconciliation, informs potential funding recoveries, supports audited note disclosure requirements, and feeds the ministry's standardized reporting template. Similar to tab A5, please refer to your 2025 FAIR guidelines for exact definitions and Peel's accounting and note disclosure guidelines. It is important that your amounts align with your audited financial statements. Accuracy in this tab is essential. At the top of the tab, you'll enter administrative and program information that provides important information to both Peel and the ministry. Start off by entering your license number, how it exactly appears in the childcare licensing system. Then enter in your licensee name, exactly how it appears in the childcare licensing system. Then enter in your CWELCC enrollment date. This is used for ministry reporting. Enter the date your agency enrolled in CWELCC program between April 1st, 2022 and December 31st, 2025. You may refer to your CWELCC approval letter for confirmation of this date. Next, enter the number of months covered by your financial information, typically 12 months. This is particularly important if the center opened, closed, or paused operations mid year. For example, if this site started operations July 1st, instead of 12 months here, the provider would input 6 months. Then enter in the total number of service days the center was open during the year. It is very important that you read this note here. For example, if the center was open from Monday to Friday from January to December and closed on statutory holidays, bracket 10 days, then enter 251 days. Additional fields such as city, building type, related party transactions, and operational status provide important helpful contents for Peel Region's review and may require additional comments in column H. In column H, please read these instructions for row 13, 14, and 15, and if required, enter in the comments in this section in column H. Moving down to the revenue section, starting on row 18, 2025 Seawell cost-based funding used. This line is auto-populated from tab A7. This line will be properly generated once you enter in all your expenses. This represents the final eligible program cost funding and excludes allocation in lieu of profit or surplus. Moving to 2025 CWELCC allocation in lieu of profit surplus. This line is also auto-populated from tab A7 and once again will be properly generated once you enter in all your expenses down below. It is not an off expense offset and must never be netted against costs. It is reported separately for transparency and note disclosure purposes. 2025 base fee revenue collected from parents is entered in manually and includes all mandatory base fees. It excludes certain revenues such as subsidies, grants, optional fees, late fees, and NSF charges. Please review the FAIR guidelines for a complete description. Moving on to 2025 childcare fee subsidy received from PEO is also entered in manually. These amounts are treated as base fee revenue in the CWELCC reconciliation and flow into tab A7. 2025 school age 6 to 12 programs, regional funding used, is also auto-populated from tab A3 school age program section. Moving on to 2025 non-base fee revenue for 0 to 6. This includes optional fees, late fees, and NSF charges and must be entered in manually. Moving down to 2025 Lifelong Learning Day, 2025 One-Time Emergency Funding Operating used, and 2025 Program Staff Top-Up used. These are all auto-populated from the information you input into tab A3, similar to school age funding. These revenues are reported for completeness and transparency, but only eligible portions are used in the CWELCC reconciliation. Moving on to other regional grants. Other regional grants must match tab A9, Summary of Reconciliations, row 25, labeled Other Funding. Please describe the funding in column B and are included for note disclosure requirements. Other revenue, such as interest revenue, rental revenues, are reported on row 29 and must be entered in manually. Now we'll move on to the expense section. For the expense section, ensure to enter in the gross expense for each row. All expense must be appropriate, reasonable, and attributable to childcare. If any expense does not meet this criteria, include these expenses in the other ineligible section starting on row 118 in this tab. Also, if serving 0 to 12, all expenses are required to be split 0 to 6 and 6 to 12. Providers can use Peel's Accounting and Note Disclosure Guidelines, Appendix 7, Proration Guide for Centers for more details. Moving on to the salary and benefits section. The salary and benefits section is the most critical portion of tab A6. Program staff wages, wage enhancements, statutory obligations, and benefits must be reported accurately and split where applicable between 0 and 6 and 6 to 12 age groups. For the salary section, there is no proration formula as providers are required to use actual costs from their payroll register. Also, providers should review Peel Region's 2025 CWELCC Guidelines Section 5 regarding prorating salary. Providers should claim the staffing expenses under 0 to 6 if the staff supports children younger than 6 years of age. Providers should claim staffing expenses under school age funding if the staff supports 6 to 12. If a staff is a floater or serves both age groups, providers should claim the cost under the program where the staff spends most of their time. You can only claim expenses once. Moving down to the salary section, program staff and supervisor sections have the same type of requirements, and I'll go through the program staff roles. The description of the roles here apply for the supervisor section. Only difference is program staff lines should not include the supervisor costs, and supervisor roles should not include program staff costs. Starting on row 38, actual program staffing, wages by employer, are wages paid directly by the employer. This should be wages only, excluding any benefits or regional fundings. GOF, WEG, and workforce compensation, these amounts are eligible only to the extent allowed by the individual grants and CWELC rules. Employee statutory obligations are any mandatory benefits such as CPP, EI, WSIB, EH, vacation pay, and statutory holidays. Supplementary benefits are non mandatory benefits such as health, dental, pension insurance. And other costs are the program staff top up amounts, bonuses, retroactive wages, or any payments that are in one time in nature. Once again, these descriptions apply to the supervisor section. We'll move on to the other staff wages section now. The other wage section is divided by non program staff, management compensation, and owner compensation. For each line, read the description carefully. For non-program staff wages, salaries and benefits are reported on this line, and any bonuses paid to non-program staff are recorded on this line. Then moving on to management section, the management salaries and benefits are recorded on this line, and any bonuses paid to management are recorded on this line. Moving on to the controlling owners, directors, or trustees, salaries and benefits are recorded on here, and any bonuses paid to owners, directors are recorded here. For any other wages that are not listed, can be included in this section. Please read each row carefully to ensure costs are being reported in the correct section. Providers can refer to the FAIR guideline for detailed descriptions. Moving on to the occupancy section, rental of office, property tax, property insurance, property maintenance, mortgage interest, utilities, and other. If using the other line, please delete this, please specify and input the description of the cost. These costs are reported gross and prorated based on your records. There is no proration formula applied. If direction is required in prorating these expenses, providers can use the accommodation percentage from tab A2, row 48, or refer to Peel's accounting and note disclosure guidelines. Moving on to the next section, nutrition, program, general administration, and others expenses are automatically prorated using tab A2, the proration calculator. If you are deviating from the ministry 0 to 6 verse 6 to 12 proration calculator, you will not only need to document the rationale and calculation in column H, in this column here, but you will also need to apply the chosen method consistently year over year for that expense line. I want to highlight the amortization section, amortization for capital assets eligible for cost based funding, and amortization for capital assets ineligible for cost based funding. For further details, please have your accountants review the Peel's accounting and note disclosure guideline for treatment of these expenses. This is new this year. These amortization, eligible amortization and ineligible amortization needs to be divided out. In the past, it was only one line. Moving on to the next section, one time emergency operating funding expense directly flows from tab A3 and is reconciled in tab A7. If there is any underspending in cost based funding, OTEF expenditures are applied to cost based funding to maximize cost based funding. For further details, review OTEF Operating Reconciliation with Program Costs Adjustment section starting on row 79 in tab A7. Non-base expenses for 0 to 6 families are reported here. Please provide the description of the cost here. Examples of these expenses are field trips, French class, music class, or yoga class. And then we have the other ineligible expenses for 0 to 6 families are reported here. Please delete this description and input the description of the cost. Examples of ineligible expenses are donations and fundraising expenses, staff meal expenses, unless related to staff training, or penalties and fines. For a detailed list, review the FAIR guidelines as a guide and expenses that are not reasonable, attributable, and appropriate for child care go in this section. Below, you'll see expenses divided out by 0 and 6 and 6 and 12. In this example, total expenses are around $2 million, and the 0 to 6 portion is 1.9 million, and the 6 to 12 portion is 122,000. Important note, your current income, in this example, the current income is $69,616. This amount should match your net income from your audited financial statements. Why this level of detail matters. To close, it's important to understand why accuracy in tab A6 matters. This tab drives your CWELCC reconciliation, determines potential funding recoveries, feeds the audited financial statement note disclosure requirement, and supports ministry cost based funding monitoring. A single error in this tab can have impact funding outcomes. Now we'll describe the multi site template. I want to highlight for multi-site providers the information in tabs A6 must be reported per site. For Peel Region grants, Lifelong Learning Day, program staff top-up, expansion funding, and school age funding is only auto-populated in the consolidated income statement. Ensure to capture all the costs in the respective site expenses. In addition, the license number and name for multi-site templates are populated from tab A2. Ensure the correct revenues and expenses are being recorded under the correct license number. For multi-site, there is a consolidated operations tab that adds up the revenue and expenses from the individual sites and brings in all the revenue from the Peel Region Grants tab. Going forward, multi-site and single-site template will be the same. Now, all the inputs are done. In the next few tabs, you'll only need to review the data to ensure data is accurate before signing off. Moving on to tab A7, 2025 CWELCC and OTEF Operating Reconciliation. This is a review tab only, and no data entry is required. Tab A7 is where the template brings together information from across the workbook to calculate your final CWELCC entitlement for 2025. CWELCC funding summary. Your cost allocation. In this example, you see the program allocation of $1.8 million and then brings in your in lieu of profit. This section here is replacing your expected base fee revenue offset with your actual base fee revenue collected throughout the year. This is your true allocation, as now we're calculating your allocation based on your actual revenue. For your actual base fee revenue, we are including parental fees, fees received for Lifelong Learning Day, and child care fee subsidy. In this example, we have $350,000 from actual parental revenue for 0 to 6, $800 in fees revenue from Lifelong Learning Day, and then we have $65,000 in child care fee subsidy, giving us an actual base fee revenue of $415,800. This allocation is with your actual base fee revenue offset, which is $1,525,840. Important note about base fee revenue. At reconciliation, the ministry requires us to compare the expected base fee revenue offset and the actual parental base fee revenue collected, which is what is the total of these three amounts. In accordance with ministry guidelines, the higher of the two amounts is used in calculating your final CWELCC entitlement. In the example we've been working with, expected base fee revenue is $400,000 and actual collected base fee revenue is $415,800. In this example, the provider would be required to pay back $15,800 to the regional PO. However, if the provider collects less than expected base fee revenue, the region will not pay additional funding and the loss is on the provider's side. The eligible expenses used in this reconciliation flow directly from tab A6 operations. Total expenses for 0 to 6. The total expenses for 0 to 6 was $1,900,094.50. This amount is adjusted to arrive at your eligible CWELCC expenses. This tab automatically adds any mortgage principal paid, adjusts for OTEF operating, program staff top up, and other regional grants. It removes ineligible expenses and removes non base expenses. After these adjustments, we arrive at your total CWELCC eligible program cost. In this example, $1,793,301 is your eligible program cost. The program cost allocation is $1.8 million and $6,998 of underspending exists. And this is being applied to your OTIF expenditures to maximize cost based funding. The amount of OTEF expenditures being applied to cost based funding can be reviewed on this tab starting on row 81. This, on, this only applies to providers receiving OTEF operating grant. If any underspending exists, this will be recovered by the regional appeal. If you have overspent your program cost allocation, no additional funding will be provided by the regional appeal. Moving down to the repayable summary. The repayable is subject to change after Peel's reconciliation review. This summarizes the underspending of program cost allocation. There is no underspending in this example because we used OTIF expenditures to maximize our cost-based funding. Since there is no underspending of program cost allocation, there is no recalculation of in lieu of profit. However, if there was underspending in your program cost allocation, it would be recovered here and show the amount would be showed here, and due to the underspending, your in lieu of profit surplus would be recalculated. In this example, there is a repayable of $15,800, and that's due to collecting more base fee revenue than expected. Down here is a detailed summary of your reconciliation. Please review this section. Below this section is the OTEF Operating Reconciliation with Program Cost Funding Adjustments. Please review this section too. If you have received OTEF Operating, this tab will show whether any underspending in cost-based funding was applied to eligible OTEF operating expenses and show your final OTEF recovery amount. The adjustments help maximize cost based funding before recoveries are calculated. There is no difference between multi site and single site template for this tab. Now we'll move on to tab 8. Tab A8 Gov Grants Input. This tab is review only and no data entry is required. Tab A8 shows the exact amounts that must be reported in Gov Grants for year end reconciliation for the following announcements: for your 2025 CWELCC cost-based funding announcement, for your 2025 CWELCC allocation in lieu of profit surplus announcement, and your 2025 CWELCC one-time emergency funding announcement for major capital and operating. In the example you see on the screen, you are required to enter the yellow highlighted amounts and report them in GG. For 2025 CWELCC cost-based funding announcement, providers should enter $1,384,200, and there will be a recovery of $15,800 as we explained earlier. For your allocation in lieu of profit, enter in $141,640, and the recovery is $0 because it matches your awarded budget because there was no underspending in your program cost allocation. Then we move on to your 2025 CWELCC one-time emergency funding announcement. In this example, OTEF operating, there was we spent $13,301, which gives us a recovery of $2,698.70. And then there is for major capital, the spent this period is $13,000, which gives us a recovery of $13,000. If you read through this example, you can see that $6,700 is being applied to your OTEF grant to maximize your cost based funding. Providers should use this tab as a cross-reference when completing GovGrant submissions to ensure figures reported in GovGrants match the FAIR template. There is no difference between multi-site and single-site template for this tab. Next, we'll review tab A9, Summary of Reconciliation. This is the new note disclosure requirement you are required to disclose in your audited financial statements. This is a review only tab and no data entry is required for grants already listed in tab A3. If there is a grant that is not listed, please include it in row 25, Other Grants. Tab A9 summarizes in one place funds received, funds spent, amounts repayable to the region of Peel, and deferred funding balances. Deferred funding balances only applies for capital funding. This is a summary of all regional Peel region funding received in 2025. Information is in this tab is automatically populated from previous tabs. Providers should review this tab carefully as it represents the final year-end position of Peel funding, and this amounts are reflected in the A5 financial position. It is important that the totals in this tab must align with your audited financial statements and any liabilities or deferred revenue recorded in A5. The provider's responsibilities. If you receive Peel region funding that does not appear automatically in tab A9, you must manually add it to other funding to ensure complete disclosure. Any amount identified as repayable to Peel must be accrued as a liability in tab A5 financial position and reflected in your audited note disclosures. Any unspent capital funding will appear as deferred funding in accordance with Peel's accounting guidelines. Key takeaways from this tab. Tab A9 is just not a summary, it's a note disclosure requirement from Peel's accounting and note disclosure guidelines. This tab should be shared with your accountant or auditor and used to confirm alignment between your fair submission, GovGrants reporting, and audited financial statements. Completing the fair without reviewing tab A9 can result in inconsistencies or compliance issues. There is no major difference between multi-site and single-site template for this tab. Moving on to tab A10. Tab A10, Definition Codes. For detailed explanations and official definitions, providers should refer to their 2025 FAIR Guideline, which is the authoritative source for terminology used in this workbook. Moving on to tab A11 and A12. Tabs A11 and A12 are review-only summary tabs. These schedules came directly from the ministry. These numbers will be submitted to the ministry on June 1st. That's why meeting the submission date of this template of April 30th is critical to avoid funding impacts. You do not need to enter data directly into either of these tabs. Instead, they bring together financial and operational information collected from all previous tabs in this workbook. Together, these tabs act as a final summary and verification step before submission. Tab A11 and 12 supports the Ministries of Education standardized financial report. All amounts in this tab are auto-populated based on information entered earlier in the template. Providers should carefully review these tabs to ensure the summarized financial information matches what was entered in prior tabs before the signing officer attests to the accuracy of the submission. Provider review responsibilities. Even though tabs A11 and A12 are review only, providers are responsible for confirming that amounts are consistent with earlier tabs, funding, expenses, and offsets align across the workbook, The information accurately reflects the provider's financial records and audited financial statements. If something does not look correct, the issue should be corrected in the Source tab, not in A11 or A12. This review supports accurate reporting, proper reconciliation, and compliance with Peel Region and Ministry of Education requirements. Now I'll highlight important amounts in these tabs. If you scroll down in A11 to row 73, row 73 is your total eligible program costs. In this example, total eligible program costs are $1.8 million since the template maximized cost-based funding using OTEF expenditures. Row 75, the $26,301 is the total amount eligible for OTEF capital and OTEF operating. Row 79, information is collected from the KPIs tab from row 42, total EPS expenditures for CWELCC children. Moving on to tab A12, row 6D is the total recoverable amount for cost-based funding, which is 15,800 in this example due to base fee revenue recovery. Row 67 is the recovery for OTEF operating and capital, which is $15,498. Row 71 is the total recovery for cost-based funding and OTIF capital and operating. The $31,498 recovery should match your total recoveries from tab A8 Gov Grants input. There is no difference between multi-site and single-site template for these tabs. This concludes our walkthrough of the 2025 FAIR, CWELC, and OTIF single-site template, highlighting changes for multi-site templates covering tabs A1 through A12. Throughout the workbook, information entered in earlier tabs flows forward to support funding reconciliation, standardized reporting, and audited financial statement disclosures. Before moving on, remember that any updates or corrections should always be made in the original source tabs and not in the review only tabs. In this example we've been walking through is an example of program costs being fully spent with an adjustment to OTIF operating and a recovery for base fee revenue. Once provider information is complete and reviewed, please review the annual attestation on tab A1 beginning at row 21. Once reviewed, enter the signing officer's signature on row 26 and enter in the sign-off date in row 28. Also important reminder, incomplete fare and or improper sign-off is not acceptable and will result in a sendback. Thank you again for your dedication and partnership. If you have any questions or need support, please reach out to your assigned early year specialist or email us at our centralized email at earlyyearssystemdivision@peelregion.ca. Thank you once again.